Thanks everyone for joining us. We have another week of updates. Join with me, Paul, again. We're going to be talking about some company updates, talking about the balance sheet, talking about some future projects. But, first, I think it's great to talk to the new shareholders that we're seeing join the chat, talking online, and maybe address a lot more of, what Kontrol really does. We've gotten the question a couple times. It still seems like people aren't fully understanding, how we're helping companies. So, do you want to walk us through maybe how you've helped either one of the clients we have or how you would help a general building?
Sure. So great to be with you again. So if we think about the problem we're solving, annually, our energy market that we work in is buildings, and buildings consume about 200 billion annually of energy, right? And that's growing at about 10% a year. So that means you've got a building that's drawing from the electricity grid. Typically, they're paying very high usage rates, and about 30% of that, so 60 billion, is lost to waste, inefficiency. And that's what we solve through technology. So as an example, one of our largest clients is a real estate investment trust, a REIT, and they've got about 100 buildings, and we go into each building, install our software, and monitor what's happening in the building, and you use that software to drive improvements. So that could be, you need to upgrade your boiler, your chiller, you need to upgrade your HVAC system, and it's all driven by technology. So that's our software as a service platform, which then becomes an Internet of Things sale. We've got some IoT equipment that we install, which then becomes an ongoing service with that customer, and then we provide that retrofit. So every building has a value to us, and that value is software, service, and the retrofit. And so we've been very clear to the market that we're a technology company and our technology is growing, but we also do projects, because in creating the project, you're driving lots of value. So that's also true for our smart factory platform with Toyota. You start with the technology, you see what's happening in the plant, you use that technology to drive future savings and future improvements. So that, in a nutshell, that covers the energy side. Buildings also contribute to about 40% of global greenhouse gas emissions. So we have a mandate to service our customers with emission technology, where we're installing equipment, we're monitoring those emissions for compliance purposes, and we're reporting back to the customer or to some government agency. So the two sides of our business are energy and emissions, which actually speak to each other.
Yeah, no, that's awesome. So I guess to put it in kind of perspective for people, it'd be like, your house, if, I was looking at the utility bill, all I see is that it costs, $1,000 a month, for example, but you give a much more kind of, breakdown and like, well, you could fix this, that'll improve your cost, and everything else in between. And then, obviously you guys have other solutions on top once you find out what's wrong. Is that kind of
right? So our software and our hardware, our Internet of Things devices, are patented. So we've got 2 patents. And that software works in 15-second intervals, and we can go into any building within a couple of hours, have our technology installed, and start reporting to the building owner. So interestingly, we've analyzed 30 billion data records, which is a big number for a company like us, and that's growing.
Yeah.
And so what I would say to investors, it's really simple. Every time we get a new building as a customer, we make money. And you can put a value on that building of what that's worth to Kontrol. You can see where we are today, somewhere around 100 to 125 buildings in a pure software play with some retrofits. So let's say we scale that to 300 buildings, you would 3x the revenue. So for me, it's a pretty simple business, but it's not one of those. It's not one of those industries that I would say exist in every investor's mind. It's not like cannabis, which is everyone gets that, right?
Yeah, I think the biggest issue, like, people can't touch it, right? Like, that's the hardest thing.
Right.
So, but obviously, it's a growing industry. More and more buildings being built, but also buildings getting older. And I'm, assuming that as buildings get older, their efficiency changes, right? And obviously, that's where Kontrol has a big opportunity. Like you said, $60 billion in wasted energy, and that's only increasing every year, right? So you guys come in and obviously have a solution to that.
So I would think it would help investors understand the big dogs in our market, the big players, are companies like Siemens, Schneider, Honeywell, really large, integrated, global companies that do exactly what we do, but at a global scale, right? We're kind of a startup, and we're taking market share because of our proprietary software and our process. But it is a well-established industry. People may not be as familiar with it, but you'll recognize those names, right? I mean, those are kind of big industrial conglomerates with software, hardware, in projects, and we're using that same model. So in our industry, when you ramp up to about 100 million to 150 million, you start to look like an acquisition candidate for takeover. So we're really working hard. Our goal is to get to that 100 million as fast as we can. And then who knows what will happen, but it's an established industry with a lot of growth players, and we're part of it.
Yeah, and I guess, maybe just to give that one layer deeper, if you're signing up a building, for example, how are you charging? Are they giving you a percentage of like how much you're saving them, or is it like a set fee? Or I'm sure it's not a one shoe fits all, but what's kind of your ideal kind of cost?
So look, in very simple terms, a building has a value to us, and that value, let's say we use a rough number of 100,000. It could be between 100 to 150,000.
Okay.
About 15% of that is software on a recurring basis annually, so every year. About 15% of that becomes service, so come back to my building and service the problem that you've discovered.
Yeah.
And about 70% of that is a one-time project where you're fixing something today that should last about 10 years. So in our model, we've got an interesting chart. So I should mention we've just updated our PowerPoint for our website.
Perfect.
We've got an interesting chart that shows as we scale buildings, the software component grows faster because it's recurring, and the projects are still growing, but not as fast as the software. So what's actually happening with Kontrol is we're becoming a larger software company over time. And that's the way our industry works, is you have to get the building to put your software in. So we look at the building as the customer, essentially.
Got it.
And so every building has a value. Some buildings have more value, some have less, but that's how it works.
Oh, well, fair enough. And I think, this was a good kind of overview for a lot of people. Obviously, people that weren't 100% sure. I know it's something, compared to other companies that you can't actually touch, but it makes a lot more sense when you break it down. It seems like it's kind of like a, diagnostic. Obviously you can buy them for cars. They kind of let you know what's wrong, same kind of thing. And then obviously that opens the door to, okay, here's 10 ways we can save you money. And obviously that conversation is, probably a pretty easy one once you got your foot in the door. So that's awesome.
Yeah. So, if you think of the, thousands and thousands of buildings that have been built over the last hundreds of years or the last 50 or 100 years, they all need an improvement, right? And so a building owners, one of their biggest costs that they can't control is energy. And so we call that a retrofit. And so using our technology driven by software and the Internet of Things, we then drive to the retrofit. And that makes perfect sense for our customer, because not only have we identified the problem, diagnosed it in real time, we're analyzing it on a 15-second interval basis over time. Now we're fixing their problem. So that's how our customers view us, as that turnkey solution.
Yeah. No, that's awesome. Hey, that's a good spot to be in. To me, it sounds like a pretty great model. So awesome. So I guess let's carry on. Let's go to the next step. Obviously, we want to give a general update to everyone. Why don't you kick it off?
Yeah. So look, one of the challenges of being public, quite honestly, is you can only put out information, when it's material and you've signed something. So what ends up happening with a lot of small cap companies is you spend a lot of time in business development, you spend a lot of time building relationships, make your announcement when it goes firm or contracted. So we've been extremely busy. There's lots on the go, but we can only put out news, of course, when it's contracted. So today we announced that we've got a new board of director. We're excited about that. Not only does it diversify our board, but we're adding someone with kind of global reach in the renewable industry, and that's very exciting for us. We've got new customers that we'll be announcing that we've been onboarding, but you can't announce them until a certain point in the relationship. And the other challenge of being public is, news flow is intermittent, and you shouldn't manufacture news if it's not material. So our approach is, hey, when we've got something material, we're going to share it. We are spending a lot of time in BD. We're excited about our business. We're the biggest investors in our business, right? And that's one thing I always say to my shareholders is, if you don't buy into our philosophy and where we're going and the fact that we own a lot of shares, you shouldn't be a shareholder. And if you don't want to be a shareholder, that's great. But we're excited about our business, where we're going, the growth. And I think over the next kind of 6 weeks, there'll be more news that's flowing, but we have to be careful that when we announce it, our customers are on board with the announcement, everyone's happy, and it's, properly contracted. Right?
Yeah, no, there's a lot of stuff there. Obviously, you guys are doubling down on yourselves, which is what a lot of investors, I think, have overlooked a little bit in your situation. But, it's awesome to see you're in a growing industry, which is fantastic. And like you're saying, you're only getting more and more traction. You just added a new board member, and, like you were saying, global reach. I mean, hey, sales drives a business. Bringing on someone of, kind of that level obviously can only help you guys grow. So that's fantastic, and something, and I think, again, you're still putting some framework in, but for the bigger picture, it looks like things are coming together, which is fantastic. So that's awesome.
Well, look, we look at this, we've been at this 4 years, right? We started at $1 million of revenue. We've had doubters all the way. I'm okay with that. But most shareholders that own the stock are buying into our philosophy.
Yeah.
We're just at the beginning of where we're going, right? We're not stopping here. This is really just the beginning, and we've got a lot of work to do. And insiders own about 46% of the company, so we have no vested interest other than to grow this. So we're super excited about our growth, but the market is the market. The other thing I would say is we view our life in terms of quarters and years. Mm-hmm. We don't measure ourselves by weeks and months. That's just ridiculous. I mean, to evaluate yourself over a week or a month as a public company, no CEO should do that, right? Mm-hmm. You should really look at your quarter and your year and multi-year to drive a business that has real value. Anything else, you're just kind of playing the FOMO trade the stock game, and that's not what we're doing. We're building real value.
Yeah, I guess the mindset is, trying to tell people to have a little bit more of a longer term thinking. Obviously in small caps, it's tough. There's a lot of noise. There's a lot of, other things out there. But, if people believe in the vision, again, it is a growing industry. Obviously it's a growing company. Like you've been saying, you've got a crazy track record, is that you just want people to take a step back and really realize where Kontrol might be in the future. Right. And is that kind of what, what you're getting at?
Well, so I would say, look, if you don't believe in management, forget Kontrol, any company. If you don't get management story, if you don't understand how management's compensated, and if you don't believe in the vision, never invest. Because you're making, in small caps especially, you're making a really big bet with the management team. So I'm not sure what else we could do other than to be fully invested in driving the company forward. And if that's not your thing, great. There's other companies you can go chase. In large caps, it's different, because in large caps, you have a lot of structure. You've got an embedded big business. If the CEO and the management team leave, they can be replaced fairly easily, not all the time. But in small caps, you really got to buy into management's vision. And that's what we're preaching is, I don't use the word patience, but companies are built over quarters and years. They're not built in months. I mean, that's just the way it is, right? So
yeah,
that's my story.
Hey, it's fair. No, especially. So I think, a lot of good points there, and still a lot of things people should be excited about. I know you mentioned there that, there's going to be a lot of future things that we want to talk about in the coming weeks. It sounds like you have some pretty good updates, some pretty good things in the pipeline that, they're signed, but they're not at a certain point where you can release yet. But in the next couple of weeks, I guess we'll be there. So really, is it just
what we have to be careful of, and I think Toyota is a great example that I can share, right? So that deal took about a year to put together, and just the press release, the approval process was about 3 months. So I don't think investors, most shareholders in small cap, don't understand that when you're dealing with large companies and you're structuring deals, you're putting things together, it's a process, and things don't happen overnight. And to build trust with your customers, it's not about the press release, it's about executing on your business. So I think in general, people should have a view that they should be with a company for a few quarters, maybe 3, maybe 4. If management's executing, you kind of stay the course, and let's see if they can drive the value higher. But we're not in the game of doing something every week, announcing it, and if it's all fluffy, right? It's got to be real substance. And at the end of the day, and here's, I don't want to be a preacher, but I can only sell my shares, and I own a lot of shares, when there's a big exit or there's big liquidity, right? And I can't sell my shares now. So I don't really care what's happening today or tomorrow. Like, we're working on a long-term plan and vision. Mm-hmm. And for me to get an exit, the company's going to have to be worth way more than it is today, right? So I think shareholders often miss that point, that it's not like we're trading our stock, right? So
yeah, well, it's sad because
value, right?
the small cap world is unfortunately plagued with the people that aren't doing things the way you are, right? So, you know, there is a lot of CEOs out there that are selling their stock, unfortunately, right? But obviously, you know, that's not you. I know you've been saying that for a while, and you know, it's true. You know, you see the long-term vision in your own business. You're doubling down. You know, you've got a better handle on where this thing's going to be, you know, in a year, in 2 years, 5 years than anyone else. So, hey, you know, if you're the one, you know, holding on more than anyone else, then it should be a, you know, good sigh of relief for a lot of shareholders.
Yeah, I mean, that's the big bet that shareholders have to make. I'm not saying I'm right. In my track record will show if I'm right or wrong, but I think the approach that shareholders have to take is we're betting with management, right? That's the key.
Yeah. So fair. So I guess, you know, the next step, you know, what people can expect, obviously, I mean, the Telegram's still a channel. If people want to ask questions, you know, we'll be there, both myself and Paul. And then going forward, you know, we're going to be doing another couple videos. We've got some other things to announce, some things people can look forward to in the next couple of weeks. And
so there's actually one thing I would like to address, because there's a lot of chatter about it, which is our debt structure.
Okay. I
think this is really important, right? So when we started this business, we had the approach that we were going to use 75% debt and 25% equity. And the reason we said that is because we wanted to limit common share dilution, which most small cap investors really don't care about. You know, most small cap companies end up with about 200 or 300 million shares. That's kind of the average. And then they do reverse consolidations and yada, yada. So from my perspective, our structure is the same as when we started. So we've always been able to refinance our debt. We use debt to grow. We've got some current obligations that are coming up. Those obligations were refinanced last year. And so most of our obligations are unsecured, which gives us flexibility. And there's always a way to, you know, structure something, whether it's what we call a one-year renewal or a multi-year renewal. So we're not concerned about our debt structure. And I think people really, in small cap land, really don't like debt because they don't understand the purpose of it. And the purpose for us is it's growth capital that's non-dilutive. Mm-hmm. And we've been managing that for the last 4 years really well. From my perspective, we're doing what we should be doing. And if shareholders don't like that structure, then they shouldn't be in our deal, because that's how we limit dilution. And we're not printing up shares every day to get to 200 million shares, which is a pet peeve of mine. Mm-hmm. But I think to say it fairly, in small cap Canada, you don't really get rewarded for having a really sound common equity structure, and you get penalized for using debt. And unfortunately, that may be true for us. And the way out of it is just to grow out of it. But I feel very comfortable with the structure that we've built. And it's been the same as last year and the year before and the year before that. So.
Yeah, it's fair. And I guess if anyone has questions, obviously they can ask more about it. You know, I think that's good to address. And you're right. You know, I think the path forward, like you said, is just simply continuing to grow the business and going from there,
that's
right?
So. Growth solves most challenges.
Yeah, and it seems like you guys have that one, you know, down pretty well. Obviously, your past couple of years have been, you know, growth has been fantastic. So it seems like, you know, hopefully this is just a matter of time before we push through. So sounds good. Is there anything else you want to say before we, you know, kick things off?
No, I think that was a great kind of catch-up call, and appreciate your time.
Awesome. Well, you know, everyone, if you have questions, obviously me and Paul again will be in the Telegram, and, you know, look forward for a future video.
Thank you.